In terms of just setting us up for the week, we're going into a week where it looks like the dollar is starting on the back foot. Is that a trend that is likely to continue and be maintained?
That's certainly the risk scenario, Guy. I think that's what people are worried about. And that narrative does seem to be gaining traction as well. The idea that people are moving their cash sequentially out of US assets, both on the equity side and on the bond side, in favor of overseas assets. We saw a lot of that, obviously, last week with all of the volatility. Now, in the Asia session, the dollar did start particularly weak. It's actually recovered some of those losses. You know, one thing we don't really know for sure, but one thing that's going to determine it is how far the Trump administration is still going to go with the tariffs. If there are more signs of an easing of those tariffs, then that may play into a more favorable dollar perspective, particularly if there's less confrontational approach. On the other hand, you know, if people are genuinely losing trust in the US and the US economy and US assets as a whole, then there could be a long way further to go because the dollar is overvalued on most measures of relative value for currencies.
Paul, what do dollar bulls need to hear from Chair Powell to reinstate some confidence?
I don't know if it's Powell who will be the one that would give them confidence. It's more all about the president, right, Kriti? I think that one thing that we did get a little bit of positivity in U.S. markets on Friday was from the fact that one of the Fed speakers, Collins, was talking about the idea that if there's market dislocations, then don't worry, the Fed's got your back. But they would need to be pretty extreme because we've already had some pretty big market dislocations. If you look at swap spreads, for example, if you look at bid-offer spreads at the back end of the U.S. yield curve, you know, there has been some troubling signs already, and we haven't seen any action so far from the central bank. I think, you know, if the central bank does say that it's going to do something, and that could mean stepping up cuts in interest rates, and actually that could still play dollar negatively rather than positively because of those relative spreads. And if people are taking their cue more from short-term yields than from long-term yields in the US, then that may still not be very supportive for the dollar.
Let's talk about gold. Gold catching yet another bid. Is gold the new treasury? There's a lot of debate about this over the weekend in what I was reading. Can gold replace treasuries as a safe haven asset? It's a much smaller market. You're going to see, therefore, the market moving much more aggressively in theory. Can it really serve the same purpose given the scale of the two markets?
I mean, the one thing that gold has going for it is it's physical, right, Guy? You actually have gold in your hands or in your reserves if you're buying it, as opposed to treasuries. So on the flip side, treasuries pay you a coupon. They give you an asset that you can use as collateral in trades elsewhere around the world as well. So they're useful in terms of greasing the global economy as well as a store of value. On the other hand, if you just want to stay away from the dollar, and a lot of people are talking about that being a possibility, then you need something else. Gold, European bonds, Japanese government bonds, they're where people are looking.